Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. A dormant Bitcoin address from the Satoshi-Era has suddenly woken up, moving 35.55 BTC after years of inactivity. This on-chain activity signals active control in a massive $285 billion New York lawsuit targeting 3.8 million BTC. The move has reignited debates over asset forfeiture and the legal reach of U.S. authorities over early-stage crypto holdings. It serves as a stark reminder that dormant wallets are not necessarily safe from legal scrutiny. Meanwhile, the traditional finance sector is expanding its regulatory footprint. Intercontinental Exchange has launched new regulated inflation swap benchmarks for the UK and Eurozone. This strategic move strengthens ICE's suite of regulated reference rates and diversifies its data revenue streams. By offering transparent, regulated benchmarks, ICE is positioning itself as a critical infrastructure provider in an increasingly complex macroeconomic environment. Investors are watching closely to see if these benchmarks gain traction against existing competitors like Bloomberg and Refinitiv. On the macro front, India's economy is defying global headwinds with robust growth. The country's GDP expanded by 7.7% in fiscal year 2026, outpacing the 7.1% rate seen in FY 2025. This acceleration was driven by double-digit gains in both manufacturing and services sectors. The data suggests that India's domestic consumption and industrial policies are successfully insulating the economy from external shocks. This performance reinforces India's status as a key growth engine in emerging markets, attracting continued foreign direct investment. In related news, regulatory pressure is intensifying for crypto exchanges. HTX has suspended trading for WLFI and $1 tokens following UK sanctions that froze its Panama-based entity. This action raises serious questions about the authority to freeze tokenized assets and the sovereignty of user funds in cross-border jurisdictions. The incident highlights the growing intersection of traditional financial sanctions and decentralized finance, forcing exchanges to navigate an increasingly hostile regulatory landscape. Looking ahead, monetary policy remains the dominant theme. New Federal Reserve rate hikes are threatening to choke off critical capital investments needed to lower consumer prices. Analysts warn that aggressive tightening could impact broader economic stability by restricting the liquidity required for infrastructure and technological advancements. The tension between controlling inflation and maintaining investment flows is becoming increasingly precarious. While there are no major economic calendar releases in the next 36 hours that would shift the market narrative, the absence of data allows these structural stories to dominate the discourse. Traders are focusing on the long-term implications of regulatory enforcement and monetary policy rather than short-term volatility. The market is digesting the shift from speculative crypto narratives to fundamental legal and macroeconomic realities. That's your market briefing. Follow Rumour with AI for daily market intelligence.